So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I am your host, Jonny Cattani, and I am joined today by Drew White. Drew White is a former pediatric oncology nurse turned modern wealth consultant for real estate investors, business owners, and athletes. He teaches people the infinite banking concept and strongly believes everyone should become their own banker because all the other ones suck. Drew wants to bring banking back to you and me level. Graduating nursing school with $150,000 student loan debt led Drew down a path to entrepreneurship, real estate investing, Bitcoin, and infinite banking. Drew, welcome.
Hey, thank you for having me on the show today, Jonathan. I'm excited to be here.
Absolutely. Likewise. Another one of my favorite LinkedIn follows and connections, very outgoing and eccentric. And we love that because likewise. So I feel like I already know you, which is so great. We never even met, but I love when I can have guests on where I just know we're already gonna vibe. But let's go back to the beginning. We alluded, former nurse, had a huge amount of debt. What led you, take us back there and what led you to where you're at now?
Yeah, man. So, I just didn't know anything about money growing up, going into college. And I won't get into it on your show today on why a kid that was 18 could make that horrible financial decision for himself, but yeah, so, I was kind of my lot in life, right? I had $150,000 of student loan debt, had just graduated, was going to make about $35,000 a year. And, the math started to not add up. My dad, being the good dad that he was, he had tried to warn me around my freshman year, like, don't think this makes sense, buddy. But I was like, no. Hospitals are paying off people's debt. It's fine. I'll be good. And that turned out not to be true. So
Shocker.
He sits me down and he knew a little Dave Ramsey. He was a pastor. He didn't have a financial background. So he knows a little Dave Ramsey. He shows me kind of how to budget. And as he and I are making this budget, it's like, oh my God, like half my income is going to be going to paying off this debt, And so I'm not quite as big of a Dave Ramsey guy anymore. However, I do owe him a debt of gratitude because that really kickstarted like my whole financial journey. It was kind of like, all right, I'm not going to accept this debt as my lot in life. And also like learning a little bit about Dave's strategies really opened me up to being like, okay, what are the other financial strategies out there? And for me, I won't get too far into it, but Dave's strategy led me a little bit more towards scarcity. So, I did the whole thing of paying off that debt aggressively. But when I got to zero, and paid it off, it was like, well, now what do I do? Right? Like what next? And whether we get into it or not, that led me down a path of trying some things and doing, I realized, okay, real estate is definitely a place where a lot of wealthy people seem to be spending time, and so I was reading what I could. But I still had a little bit of that scarcity mindset. And so I hopped into mobile homes and flipped some mobile homes for a little bit, and for a couple of years, and provided notes on the homes because I really wasn't comfortable with debt yet. I still wasn't quite getting good debt, bad debt, all of that. And then around that time found what I do now, which is teaching the infinite banking concept. And when I read the book on it, I was just like, oh my God, I want to do this with our money, but I want to now, for whatever reason, I want to teach others. And so that's kind of the journey that led me to where I am today with you.
Awesome. I love it. What a great story. And I love that you weren't willing to accept. So many people, I think, just settle and are like, oh, well, I'll be paying off student loans for the next 20 years. And that's just is what it is, and you hate to see that.
Yeah. And I was having a hard time too, as a nurse, like, and I love the nurses I worked with, but sitting there watching, it's like, a lot of them had similar debt stories to me, not as quite as big, but still had debt stories. And they were all now going and saying, okay, I'm going to get the house next. I'm going to get the car, I'm going to buy this and just going further and further. And I was just trying to like wrap my mind around that. Like, why is this what we all do? Like I started just kind of these questions, like everybody was telling me, you need to go buy a house right now. You need to go buy a house. And I'm like, I'm a single guy. Why do I need a giant house right now? Like, this doesn't make any sense, and how do I know my wife someday is going to want to live in this like house I bought, and so I just, really questions. It was kind of like, why are we all doing the same thing? And so but that kind of led me out in a way, as the questions really led me out of where I was.
Yeah, that's you bring up such a great point, because the banks, which this is a perfect segue to get into this, but the banks have really done a great job of selling this American dream of, this is what you need to do. You go to college and just continue to take on bad debt. And certainly a home is considered good debt, right? Depending on the market cycle. Like, I just found out my house doubled in 3 years, so pretty excited about
Congrats.
that. But thank you. Yeah, I did so much really to earn that equity.
Yeah.
But let's get into it. So let's start with the current banking system, and then we'll get to the infinite banking. So talk about how it works and why you disagree with it, and it's probably not a good place really to put our money.
Sure. Well, and so I should say the banking business is actually the best business in the world. It's incredibly profitable. It just doesn't maybe benefit you and me as much as it does the banks. So what they do is, they take our money that we deposit, and they love to advertise a savings account, a checkings account, and direct deposit. And most of us don't really think, like, why are they doing that, right? But if you can think about it a little bit deeper, like, why are they doing it? Well, they actually need those deposits. They need that money because they now have to, that's a liability, and they need to now go make money with that money. And so they can go lend it out, 7 to 10 times, which is, incredible. I wish I could do that with money that people, that I get deposited into my account. But, and so they can go lend it out 7 to 10 times, and they go make more money with that money, right? Meanwhile, I mean, the average savings account I looked like last month, I think it was like 0.6% no, it's probably too high, 0.06, I think 0.06%.
Wow.
And, someone could check my math, but I think it was 0.06%. So, or something terrible along that line. You're getting a terrible return. Doesn't matter what it is, but the average is pretty bad. Well, meanwhile, they're out there making a much, much higher percentage than you, and so if you do the math, you're kind of getting a raw deal there. But what I teach, and what we go over, is kind of how to copy that in a way so that you become the owner of the bank, not the customer anymore. Doesn't mean you can't go take loans with the bank, because interest rates, even though they're raised, they're still cheap. Now you can't go lend your money out 7 to 10 times like a bank, but you can do some things and kind of build a wall around your financial system to kind of become that depositor and lender and saver and all of those things.
Yeah, I love it. That's a great point. And certainly this is starting to come to light more, right? I think there hasn't been a ton of education around it. So it's great that you saw that need to come out and start teaching it and educate people. I'm still trying to wrap my head around it. So let's kind of get into it, kind of give us a high level, and then we'll get into the weeds.
Yeah. And it's a process for people to learn. And even me, like when I first started doing it, it was like, okay, I think I get it. But then, like, let me read another book, because it's definitely, it's I would say a little bit opposite of the way that we've been taught about money growing up. And, we kind of talked about that American dream and all of that. It's why on LinkedIn, my profile picture is upside down, because I tell people it's upside down from the traditional model. And so, it's really this idea that I mentioned earlier, that you want to be the owner of the bank, not the customer, right? I mean, I think we'd all agree that being the owner would be far better. It's also centered around the idea that, right now with inflation and everything, like, money can't be stagnant, right? If your money's sitting in a savings account or in a bank account, you're actively losing value. You need to be putting it in motion. And, we talk about in our company, like, motion, is a law of God, right? Like, air has to go in and out of your body or of your lungs, or you die, right? Blood has to circulate or you die. Water stagnates, gets pretty nasty, and so you got to keep money in motion. So those are kind of two of the main, like, high level concepts. If you want me to get kind of more into like how it works and everything, what we do is we use the vehicle we use a specifically designed whole life insurance policy from a mutual company. And so it's not, the Dave Ramsey style whole life insurance that he kind of rails on, or the traditional whole life insurance that people rail on. And honestly, I mean, to be totally transparent, we don't really even care that much about the death benefit side of it. What we care is the living benefits that you get from that, and from putting your cash into that system where it can grow tax-free.
Awesome. I love that. So yeah, let's get into that. What does that look like in terms of that policy, and specifically where you have to go to get it and all of that?
Yeah. So, you obviously want to find someone like myself who knows how to design these and structure those. Your typical whole life guy doesn't usually know how to do them, these specifically designed. That doesn't mean they don't, but typically they don't. And you also want to know, are they a practitioner? That'd be huge, because if they're not practicing it, they may not have great history in designing it. But what you're going to get in that system is you're going to get tax-free guaranteed growth. Every insurance company is different. It's usually in a range of about 3 to 4% that you're going to get in that growth going on in the policy. Plus, you're going to get the dividends. And the reason that you want to be mutual insurance company is that you are now like a shareholder. So you get those dividends. You're basically an owner, right? And once you have that policy, you own the policy, not the insurance company. It's yours, and you can control it. And then from there, I've said a lot, but how it will work is, once you start putting that cash value in there, well, you can now use that cash value to do what I was talking about earlier, which is to put your money in motion. So you take that money and you go, say, put it into cash flowing assets. We're big fans of real estate. Personally, I'm a big fan, business ownership, but whatever you're into. We have people who they're good in the stock market and they know what to do with it. And so they'll take that money from the policy and they'll go use it in the stock market. And then the last part of this, to bring it all together, why? Because the next question typically that you may even ask me, and I'm going to jump the gun and just ask myself the question, is why would I do that versus, say, like a savings account, right? Why would I put it here and do that? Well, one, it's like a tax shelter, right? It's going to grow tax-free guaranteed. But two, what happens when you use the money in that policy and you go, say, let's say you put 50,000 down on real estate. Well, you're actually using the insurance company's money. They're giving you a loan against the cash value in your insurance contract. And so your 50,000 just has a lien there, but it can still grow tax-free guaranteed uninterrupted. So this is when I say it's upside down from traditional financial world. We're taught where, money is either or. It either grows in your savings account or your real estate deal. But in this scenario, it actually grows inside your policy and in your real estate deal. So I hope I said a lot. I hope that makes sense for people.
No, absolutely. That's incredible insight. So a lot of questions come to mind. First one, explain the policy. What does that look like in terms of, kind of how that's outlined, if you can?
You mean like how it's designed or?
Yeah, how it's designed.
Yeah. So, you're going to, what some people call it, and it's not our favorite way to call it, but they say you overfund it. But really what you're doing is you're building up your cash value. So you're going to build up your cash value the first, 4 years or so. Everybody's a little bit different to get your policy where it meets this, what we call efficiency. A good, hopefully, however it's been designed, you should always be able to take a loan against it, like right away once that money has gone through. So I meet with people quite a bit who get set up with something and they say, well, yeah, I can't take a loan against it for 5 years though. And that's not infinite banking. You should be able to use that money like right away. And it's kind of designed, to answer your question, a little bit in reverse from typical insurance. So like a typical whole life guy might sit down with you and say, Jonathan, how much death benefit do you want? We're reverse. We talk about how much cash do you want to get into this system? That's going to spit out a death benefit. And then we're going to go to work kind of justifying, if you can, be insured for that amount, obviously, and we'll make a case to the insurance company. But our focus is more on using this as a bank. And then we get that insurance number afterwards, which is less of the focus. And if you do it right and you keep banking with it and cycling that money through, you end up with more insurance than you're ever going to need anyway.
Okay, that makes perfect sense. So was this concept, like this policy that you can use, was it created for this, or did someone just figure out that you can do this with this type of policy?
Yeah, so the person who found it out and figured it out, his name was Nelson Nash, and he wrote a book called Becoming Your Own Banker. So whole life has been around, for ages. They've changed it a little bit. Before the 80s, you could you could basically, you know, people were, especially wealthy people, pumping in a lot of money to it. They kind of changed some of the rules, hoping people would not do it. There's still ways to kind of get that same policy that's what we do. But Nelson, he basically came across this in a pretty desperate situation. Back when interest rates were like, I mean, I've never experienced this, but I guess they were like near 18 or 20% or something. And so he was really underwater in a real estate deal. And he also had something going on with, I think it was his granddaughter or something that was sick at the time. So very, very stressful situation he was in. And in the middle of the night, he's just, you know, like praying and trying to find his way out of this, because just the interest payments alone, he's underwater on. And so he just realizes, like, you know, I have the cash value in my whole life insurance policy that my brother sold me, because his brother was a life insurance agent. And so, you know, he really felt like God gave him that answer, because he was like just praying and like, you know, what do I do? And so one of the jokes he would make when he was alive was that when he got to heaven and saw his brother, that he was going to say, why didn't you tell me to buy a bigger policy? And so, but the cool thing about Nelson, I got actually kind of mad at a real estate meetup recently, because someone kind of did him a disservice about his book. And they said, oh, it's this outdated book written in like the 50s or 60s. And you know, the thing about Nelson is he figured this out. I believe it was in the 70s. Might have been 80s, but he didn't even write a book or monetize it or anything. He wrote a book about it in the 2000s, because he wanted to make sure that this actually works for people. So he was teaching people he knew, you know, and showing others how to do it, but he didn't want to bring it mainstream until he knew, and after time it had been tested with time, that it worked for others. And I was at a conference recently where they talked about this. They said he could have monetized this like so much more than he did, and he really didn't, because he just believed so much that people needed to control the banking system in their lives.
Wow, that's awesome. What an incredible story. And so awesome that he, you know, didn't monetize as much as he could,
Mm-hmm.
you know, in order to teach people and educate people. So why aren't more people doing this?
You know, I think it's just one of those things about, because I get asked that a lot. I think, you know, if you're someone who follows maybe traditional advice, right, you're going to see the Dave Ramsey, the Sue Ormans, they rail on whole life insurance, talk about it being a bad place to put money. And I think just, you know, because that book only came out in the 2000s, I think it's still relatively unknown. You know, more and more people that I work with in real estate have heard of it or talking about it, you know, but it's just not been around that long. And then when you have some, I call them more financial entertainers than I do maybe people who are smart. Well, I should say I'm not smart, but financial entertainers, you know, kind of pushing this concept that this isn't a great place. A lot of times the first step I have to overcome with people is like, you know, reconsidering whole life, because they've already ruled it out and they don't actually know why. They just know that someone told them it was bad, so they've ruled it out. They've heard the phrase buy term and invest the rest, even though almost all of them never invest the rest. They just buy the term. And so I think it's just one of those things, like, you know, it's like many things in life. You kind of don't consider it because someone told you it was bad. And then when you look into it, you're like, oh, that's pretty interesting. You know?
Yeah.
So, you know, and I think too, for me, something I found, you know, people hear those phrase infinite banking and becoming your own banker. And I mean, it's just kind of like a weird phrase. You just might like gloss over it. It's like, well, it sounds kind of Ponzi scheme-ish, you know. That's how I was the first time I heard it. I was like, this is a Ponzi scheme.
Yeah. Yeah, totally. I mean, yeah, it kind of does for sure.
Yeah.
So what, I guess, so I want to get into why this is a really great strategy for real estate investors. But before, what are kind of some of the risks, I guess, associated with it?
Oh, that's a good question. You know, I don't know that there's major risks, because in terms of like, if you compare it to the stock market, you know, like that tax-free guaranteed amount that I told you that could never interrupt. I mean, it's literally locked in year after year. So you get that previous year's gain, you know, it's locked in. And then in terms of, if you look at insurance companies and their financials, you know, especially the ones that we work with, they've been around hundreds of years. So they're very unlikely to go under. There are some who've not been, you know, good insurance companies that you want to make sure to look into. So I think that could be one, is you want to make sure it's a good insurance company. Because so that would be risk. There are some insurance companies who, they're doing some things like their dividends that they're paying out, they're paying from the reserves of their company, and so that's not a great model. So you want to look into that, I guess, make sure it's really a solid insurance company that's been around hundreds of years, always paid a dividend, even through, depressions and world wars and COVID and all that. So that'd be one. And then the other thing too is just really, if you're a short-term thinker, it's probably not the best for you anyway. So, and then another, I guess, risk would be that if you is really more outside the policy. I would say this is the safer place for your money. It's what you do with that money outside the policy would be where you're probably taking a risk, which is not a bad thing.
Right. Absolutely. Okay. Awesome. Wow. Interesting. Okay. So no risk, I guess, associated with actually doing the policy, right? If you just got the policy itself. I mean, it's in the end, it's life insurance. So, I mean, I guess that makes sense. It's so fascinating. Yeah.
There's probably some risk of like, as I'm thinking about, as you're talking to, is like, there's a risk of like, maybe if you start too high a number and you say in a few years, I can't afford this, but there's definitely things that you can do to make sure you can. And if you're doing the right stuff that we coach on, which, you have people on your podcast talk about, which is use it for real estate and cash flowing assets. The goal is actually that other people are going to pay that back for you anyway. But so that could be a risk, is maybe down the year, if you don't invest wisely down the road, you have this policy for life and you can't afford it, which again, there's definitely options for you. That there's lots of various options people can do that would be too many to discuss on the show. But that's a risk people get worried about, but I would say it's not actually great real risk as long as you follow the coaching and buy some cash flowing assets.
Absolutely. And that's a perfect kind of segue. Obviously, real estate, that's the ideal thing. So why is this such a great wealth strategy for real estate investors?
Yeah. So, well, one, I think it's that they think long-term. Two, everybody loves, like, what this policy does is very similar to real estate. So real estate investors love leverage, right? They love other people's money. They love uninterrupted compounding interest. And they also don't really like to pay taxes. I mean, at least I don't know anybody who does. So you get all of those things because you're using insurance companies' money. You're getting this tax-free guaranteed growth that you only pay when you put, it's basically already been paid once you put that money in, right? And then you're able to leverage that and go buy real estate. The other huge benefit that I mentioned earlier is that say, let's get in a hypothetical, you're going to go put $100,000 down and you're still going to use bank money. I have nothing against using them to grow my wealth, right? And leveraging money. So you put $100,000 down on the down payment, and you go buy an apartment complex. Your $100,000 in your banking system is still going to be growing at that tax-free guaranteed rate plus dividends, versus if they funded it from a savings or a Roth, you lose out on that compounding. And I believe in a Roth, and I maybe check with your CPA to make sure, but I don't think you can take part in depreciation when that happens, because so in this situation you can also still take part in depreciation, which also helps your tax benefits. So that's some of the main high level reasons. There's also I don't want to get too in the weeds on your audience, but there's ways you can structure it where you are giving a loan to your LLC or your corporation, and you can set the terms of that, right? And then you can recapture that interest, pay it back to yourself. And also, again, check with your CPA. I'm not a CPA, but you can deduct those interest payments back from your business to yourself. So there's quite a few reasons. And then also the legacy part, the death benefit, which we don't really talk about much, which is huge for many people to pass down wealth tax-free.
Wow, that's incredible. So yeah, kind of touch on that legacy concept.
Yeah. So that's one of my favorite parts of the chapter in Nelson's book. It's his last chapter. And he actually, what he uses, so obviously there's a death benefit, right? And you pass that down tax-free to families, which is a great legacy to leave. The other cool thing that he did was he had policies himself that he owned on his kids and on his grandkids. And so then he actually left them all the book, his book, and he wanted them to learn how to use it, So I'm not personally a fan of like the college plans for kids, because I don't know where college is going to be in 10, 20 years. Right. And for me personally, with that, my experience of the debt, not as big of a fan. So for my kids, I'm going to take out, we're in the process of taking out policies for them and then we're going to give it to them and let them control it. And my daughter, you know, she just did a business fair. And she's 7. So she's already pretty entrepreneurial. So I can imagine her taking that money and starting a business. Maybe she doesn't want to go to college, you know, but it's a cool way to teach your kids about money, grandkids, and then also pass that down to them. And then they control the banking function and system in their lives as well. And so, and you can own it, and then you can transfer ownership on it. So that's kind of another, you know, part that people do, that another strategy. And we have some other advanced strategies that I would get too into the weeds on here, but that we can do, that we help people with that kind of legacy planning.
Awesome. Wow. That's incredible. What an incredible concept. Definitely going to be in touch about this, because I'm very interested. But you know, obviously, you know, you can go way deep into the weeds, but you kind of touched on it, reaching out to someone like you who understands it. But what are some other tips for beginners to kind of get started in this?
Yeah. So, and, you know, like say someone hears this and they might not jive with me, right? There's a Nelson Nash Institute if they want to look it up, and they can find someone in their area too that does this, that sets it up or can guide them. But yeah, you really want to make sure you're with a mutual insurance company. Me personally, it was hugely important when I did this that I was working with someone who also practiced this in their own life and didn't mind like sharing with me how they practiced it. I don't really want to ever have money with someone who doesn't practice what they preach, you know, so that's huge to me. You know, and because you can also tell them like, here's my experience with taking a loan for this and when I invest in this. And so I think that's huge, and that's really important. You want to, like I said earlier, you want to make sure it's a company that's been around hundreds of years, that they've always paid a dividend. And you can look up their ratings online and things like that. You know, you can ask them about their dividends as well. So I think those are some of the like real key things. And then, and in terms of insuring people, sometimes a question you get is like, well, what if I'm older, or what if I'm not healthy, which we kind of covered. You can take insurance on, you can own a policy on a kid, a grandkid, or a business partner, or a key employee. And really you only have to have insurable interest on the person at the time that you insure them. So Walmart kind of got in trouble because they were doing it on everybody at one point, even the door greeter, and they got told you got to do like manager and above. But yeah, so banks do this and companies do this. It's called bully and COLI as well.
Wow.
Yeah.
Fascinating. Okay. Awesome. I love that. So if people do vibe with you, which I find it hard to believe that some don't, but you know what? We don't like those people anyway. Just kidding.
That's right. Yeah, no.
Do you have any opportunities for learning more about this?
Yeah. So you mentioned LinkedIn. I'm really active on LinkedIn. You know, it's the backslash is IBC Drew, Infinite Banking Concept Drew. That's also my website, ibcdrew.com. And on my website, that might be, or if they want to learn more, that's probably like where I'd go, because I offer a free link to like a free masterclass that we have on it. And it's really going over the book and like a short course. And so there's usually limited access, but if people email me and just mention the show, I can give them way longer access if they'd like. So I have no problem doing that.
I love it. Awesome. Well, as we wrap up here, I've got 5 questions I ask all of my guests. It's the final 5. First question, what's the best advice you've gotten from a mentor?
The best advice, I just shared this yesterday with someone, is have you heard of The Gap and the Gain? It's a book.
Yeah, great book.
So for me, I'll try to keep it brief for your audience, but you know, the gap is, so basically here I am today. The gap is where I want to be in the future. And that future me is kind of always changing as I get closer to my goals, right? I figure out, oh, now I want to do this and this. And then the gain is when I measure backwards. It's where I am now, but where I started. So maybe when I was a nurse, $150,000 in debt, to where I am today. And a lot of times our problems, our mental things, issues come from living in the gap and being like, because we never measure up. We're never going to get to that thing, that far off thing, and we'll be happy when we get there, right? But if you measure back and you measure on the gain of like, wow, look how far I've come, even this year or even the past week or day, you know, look at the progress I've made. You're much happier, and you don't always feel this feeling of like, I should be doing this. And I'm not saying goals aren't good, but that last year a mentor taught me that, and that really has helped me a lot. So now I even write down, like in the book, he talks about writing down like your 3 wins from that day and then 3 wins for tomorrow. And those have really helped me to stay more in the gain, though I often still end up in the gap.
I mean, we're all human, right? Like that's
Yeah.
going to be natural for sure, but that's a
Yeah.
really, really awesome perspective. Such a great book. I've had multiple guests recommend that, and it's definitely on my list. What is it about your career that makes you feel like you're fulfilling your why?
Yeah, I think it's helping people financially set up a system that like serves them better and serves their families better. And for me, like I care a ton. Like what drives me is like time freedom, financial freedom with my family. So the more that I can like spread that message and help people to like create that and have that gift in their life with their families, like it just makes me feel better. And you know, you've seen on LinkedIn, I like to have a good time. I like to bring joy to people's life. And so for me, that's huge. Like being a dad and being a husband are like just two of my greatest callings and gifts I'll ever have. And so anytime I can help people have more time to do that in their lives, that makes me happy.
Gosh, I love that so much. That's awesome. Favorite non-real estate or investment related book?
Oof. I mean, I hope it's okay to say this. Wait, you said non-investment related though.
Yeah. So self-help is great. Business is fine.
Okay.
Yeah.
Can I say, okay, a non-real estate?
Yeah.
Okay. You know, actually, I'm going to go a different route. I'm going to go different from what I was going to originally say. The 4 Agreements.
Nice.
I read that one usually once or twice a year. You know, and it even has like different, you know, religious views from me, but it's so good. And it always helps me kind of get recentered. The bonus one that I was going to share, I'll just share it anyways, is the Bitcoin Standard. Not necessarily, even if you're not into Bitcoin, I just tell people to read it. A friend let me borrow it once and I was kind of like, oh my God, it looks so boring. But I had to read it because my friend loaned it to me. But it was fascinating on the history of money. Like really, really well written. Like that even sounds boring as I say it. And he only briefly goes over Bitcoin at the end. But it opened my eyes, and I probably wouldn't have even been doing what I'm doing if I hadn't read that first.
Wow. And that's called, sorry, what was it called again?
The Bitcoin Standard. It's very interesting for sure.
Awesome. I love it. If you could have any superpower, what would it be?
Man, I should have prepared for these questions beforehand.
No way. They have to be organic.
Oh gosh. If I could have any superpower, I mean, I'm gonna go easy. I was always a Superman guy growing up, so I'm just going with flying. I'm not even going super strength. Just
you gotta go flying.
Flying is, I mean, it seems amazing.
Absolutely.
Maybe to read people's thoughts, but sometimes I'm not sure I'd really want to do that.
Yeah, that's yeah, a bit of one of those bittersweet ones where you're like, oh yeah, I finally get to know what people think. Oh, actually, I didn't want to know that. Yeah.
Oh,
please turn it off.
I'm like, I'm too insecure for that. I'd probably be, you know, like,
yeah,
oh, like me. Yeah, I'll go flying. I'll stick with flying. Final answer.
Love it. Awesome. You kind of already touched on it, but what's the best way for people to get a hold of you?
Yeah, so I'd say ibcdrew.com. And then also I meant to mention that there's a really easy way to book a call with me. And so, you know, and I'm hassle-free. I just educate people if they want to learn more about it. And even if they have a policy they want me to look over, I mean, I'm more than willing to help people. So
awesome. Thank you so much for all of your insight. Enjoyed this so much. It's been such a great time, Drew. Thank you.
Awesome. Thank you so much for having me on.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.